Bree, if you would, thank you.
Kia ora e te whare. Kia horo te marino, kia whakapapa, pauna mu te moana, hei huarahi mo mā tātou i tirangi nei. Aroha atu, aroha mai. Tātou ia tātou katoa. Hui e, tae ki e.
Thanks, Dale Murray. All right. Apologies, and we have one from Mike Pettit. So everyone else being here, thanks, Phil. Could I have a seconder, please? Thanks, Claire. All in favour? Contrary, no. It's carried. Disclosure of members' interests. Liz.
Yes, can I just please register one for the Kayak Club item, please, for Black Karapero and Mighty River Domain.
Right, Marcus.
And no conflict of interest, but I need to leave at about just after 3 because I've got to do kid duty.
Sure.
Probably register a conflict of interest with the RDA. I had a close association with them up until about 18 months ago and did get involved in the lease negotiations at that time. So I should really register that, but I'm unsure whether it's I don't have any current conflict at all.
Yeah, I don't think that you need to be concerned about that. But thanks for pointing it out.
Yeah, I think we should know.
No, okay. Cool.
Just to be safe.
All right. Late items. No, there being none, we'll move on to confirmation of order of the meeting. No need to change, Ken.
No, don't believe
Thanks,
so.
Lou. Seconder, please. Thanks, Phil. All in favour? Contrary, no. Carried. Okay, confirmation of the minutes of the 27th of March, which you'll find on pages 10 through to 15. Thank you, Claire. And the seconder, thanks, Monty. All in favour? Contrary, no. That's carried. Now we're okay. We're cooking on gas. Item 6, council controlled organisations. So, Yolanda, welcome. And I'll let you introduce the item, please.
Thank you, Chair. Good afternoon, committee members. So this is the draft SOIs for 24-25 of each of our CCOs. We will shortly hand over to each of the CCO representatives to present the statement of intent to you. Just to note that although Civic is not a CCO, they normally do come and present the SOI to the committee. Unfortunately, Charlie is not available to be here today. We will endeavour to have him here to present the annual report once that is finalised. So firstly, so we'll hand over to each of the CCOs for their presentation. Then at the end, we'll come back and talk to each of the letters that we intend to issue to them. And then Ken and I will take you through those. So firstly, we'll hand over to Andrew, Chair.
Welcome, Andrew. Oh, I didn't have my microphone on, sorry. Welcome, Andrew, and start your presentation when you're ready. Thanks.
Thank you for having me. I'll share my screen, so hopefully. Sorry, just try and get this one sec. Okay, can you see the screen okay?
Yep, perfect.
Okay, presentation. Now, just touch on a couple of sort of recent developments, and I will touch very briefly on the SOIs and then throw it back to you for questions. Our single biggest challenge at the moment is just the sheer amount of financing that councils are doing. So if we think back 10 years ago, the average amount of lending we were doing to the sector on an annual basis was just over $1 billion. If we go back to 2021, so 3 years ago, we were doing $2.8 billion, and in the current year, it's going to be around $5.5 to $6 billion. So it's almost double the amount we were lending a couple of years ago. The reason LGFA was set up by councils after the GFC in 2008 was just because councils could see the sheer amount of debt and infrastructure that was going to be required. So in 2008, sector debt was about $4 billion. As at June 23, it was close to $27 billion. And that's going, when you look at councils' draft LTPs, you can see that it's going to be significantly increased going forward. And if you believe the Water Industry Commission of Scotland, they were saying in 30 years' time, just for water alone, the debt is going to be about $90 billion. So there's a huge amount of financing that is required. And that is the reason that the sector set up LGFA, was to access the financing for the sector. What's happened in the last year is we've essentially reached full capacity in terms of raising debt in the New Zealand market. So in the last year, we issued bonds into the Australian market, so have raised around half of our financing from the Australian market and hedged that back into New Zealand dollars. And as the amount of sector debt increases, the only way we're going to be able to access that debt is by issuing more in offshore markets and growing that offshore investor base, because the domestic market no longer has the capacity to provide that incremental financing growth. The other issue I wanted to touch on is just the organisational structure chart. So we do have the board, which is 5 independents and 1 sector member, Ellen Adcock from Whangarei. But also I just wanted to highlight the shareholder council and the role that they play in overseeing LGFA on behalf of the sector. So as well as engaging on the SOI and being really important in terms of setting the strategic direction which they want LGFA to go in, we also meet regularly and present with them throughout the sort of year. So we do have that ongoing dialogue. So they have this continuous oversight of what they want the direction of LGFA to be. And that's really important. Just as a reminder, LGFA is owned 80% by councils and 20% by the government. So the reason LGFA exists is to raise debt in the most cost-efficient way and provide certainty of financing to councils. The primary goal of LGFA is not to maximise profits. So to that extent, it's very different than a bank. And you can see that in the top sort of line, top box there in terms of our sort of operating gain, is that in recent years we've had profits around the $10 million mark. It dipped in 2023, but it's back on track to sort of get back to close to $10 million in this financial year. In the terms, I won't spend too much on because you've had this in the council papers, but we've been meeting for the 6 months to December. We've largely met our targets. The only target we didn't meet was our operating expenses are on track to be slightly higher than what was forecast. And that's because when we issued in Australian dollars, we have to pay approved issuer levy. So that's a levy on the coupon of the cost of our Australian dollar bonds. So that's something that we don't have to pay AIL on our New Zealand issuance because we're listed on the NZX, so we have exemption from that. But when we issue in foreign currency, we have to pay 2% of the coupon in tax to the New Zealand government. So because we didn't know we were going to issue in Australian dollars, we didn't budget on that cost. So it's going to come out slightly sort of higher than forecast. And again, those happy to talk about any of these individual sort of targets, but they're all on track. In terms of the draft statement of intent, again, I won't go through all of these, but just to highlight again, probably our biggest challenge is really the amount of financing that the sector is going to require. So at the moment, we've got in there for $5 billion roughly for the next 3 years. We're assuming businesses as usual, so we haven't stripped out changes in water delivery, which may or may not happen, but it now looks like they're going to happen slower than what was proposed under the sort of previous government. But our thinking, just looking at some of the LTP data coming through, is again, we might have to revise up some of that lending data. Our performance targets really haven't changed significantly other than operating income and expenses are going to be higher just because issuance is higher. And we have quite a few targets in the environmental space. And we've just got the numbers there, but again, they've been part of your papers. I won't talk too much on water, other than I wanted to highlight that we have been engaged with the new government and we're working through what the changes in policy might mean from the sector. We are keen to be involved and assist councils in that space. The Minister came to our recent the LGFA board strategy days, so we have had engagement and we're now working with Treasury and DIA on what the model might look like. So potentially in the next sort of couple of months, we can come back and talk to the council about what role we might play in that space. And that potentially is going to address some council concerns about sort of covenant levels and also the challenges that we recognise that growth councils have in terms of financing infrastructure. And lastly, just to highlight, we're putting increasing resource into our climate change and sustainability space, and we want to play a leadership role in terms of assisting the sector participate in this sort of area. So I'll finish there and hand back to you for questions.
Thanks, Andrew. Yeah, very interesting. I see Claire is fired up with a question. Claire.
Yeah, thanks, Andrew. Really good to see your report. I was pretty interested in the international focus you have now for raising debt, like you've ventured into the Australian market, and that looks like it's gone pretty well. So my questions are around, do you anticipate that you might be trying to enter other overseas markets? And then does that actually bring with it quite a few additional risks or, you know, mechanisms that might change the playing field for you, and that, like I see you were talking about hedging and things like that, and whether or not there might be other requirements that would reduce, I suppose not reduce, but increase the costs, and so perhaps the margins that you're working with are squeezed, or the beneficial rates that councils have been enjoying might be reduced, that kind of thing. Yeah, it'd be good to hear your take on those things.
Yes, I mean, one advantage LGFA has is its AAA sort of credit rating. So that means that when we go to offshore markets, we get quite good investor take up just because of the quality of LGFA's credit rating. There is more complexity when we issue in foreign currencies. You have to look at the economics of when you issue into a market. What we do is when we issue into a foreign currency, and we've done Australian dollars to date, we hedge that back into New Zealand dollars. So we remove any currency risk, but we do have to look at what the cost of that debt ends up being in New Zealand dollars after we've put the swap in place. And at the moment, the Australian market works really well for us. We're able to hedge that Australian issuance back into New Zealand dollars, and it's coming out very similar to what our New Zealand dollar financing is. Potentially in the long term, we might look at other markets like Europe and the US. We don't want to open up those markets, because if you put in place programs, there's a cost of putting in place a issuance program, because you've got to maintain those programs. So if you're not doing any issuance, you end up with some costs. It's sort of taken us, I guess, 12, 13 years before we've outgrown the New Zealand market. So we've probably got a number of years when we can keep accessing the Australian market. So LGFA was, I think, only the second offshore issuer in the Australian market to do $1 billion on their first sort of transaction. So we've been very well received over there. The big uncertainty for us is what's going to happen in the water space and what role LGFA will play or not. Potentially under the last government, we weren't going to be able to lend to the 10 water entities. So it would have meant as councils had debt repaid, LGFA's debt on issue might have gone down slightly. But if we do play a role in that space, it will mean that our financing requirements grow over time. So we've just got a little bit of work to do with the government and Treasury to see how that's going to play out.
Clear.
Well, I'm allowed to ask another question. In fact, it's just what you said about being able to lend to the water entities, because I was actually under the impression that that was being contemplated. So are you able to update us on your current discussions, and is it looking like you will be able to provide financing for these water entities if they are formed?
Yeah, we're more than happy to come back and speak to the council in a lot more depth on this, but at a sort of a high level, we couldn't have lent to the 10 WSE model that the previous government had. And that's because councils were going to be prohibited from providing any financial support to the WSEs. Apart from maybe Entity A, which was sort of water care, they might have come out at investment grade credit rating, probably BBB minus on a standalone basis. But all the other 9 would have been non-investment grade. And so the way LGFA works with the guarantee structure, the council guarantors of LGFA would have been uncomfortable, at least a lot of them would be uncomfortable, if we changed the model from lending to highly rated councils to lending to non-investment grade water entities. So we would not have been able to participate in that space. what the current government have said at the moment, and LGFA may have some ideas on policy, but we're not forming the sort of policy. But it seems to be the feedback from the government is they will potentially allow councils to manage their water assets in a form of their own sort of choosing. So some might choose to just maintain the status quo, manage it within house. Some might choose to set up water CCOs, and then the issue will be LGFA can lend to CCOs, but we can only lend to a CCO which has either a guarantee in place or uncalled capital in place. So if the council chooses not to provide any guarantees, then it's very unlikely that LGFA would be able to lend to it. So that's what we're still working through now. We probably want to see the draft legislation, and then we'll be able to discuss it in more details with councils.
Oh, look, thank you very much. I really appreciate, your comments on that. Thank
There's
you.
a lot to all of this. So again, once there's more certainty about policy direction, then we are more than happy to come back and engage with councils.
Yeah, thanks for that, Andrew. Monty's got a question.
You mentioned some councils are concerned about their covenant limit. Have you got anything more to add to that?
Yep, that's another discussion that we could go into quite a bit of detail on. So not only have we engaged with a number of councils, and we're largely talking about the growth councils, but not exclusively. But we can also look at a lot of the draft LTPs. The tool most councils have been using is borrowing under IFF. So we're seeing Tauranga and Wellington actually get approval for an IFF project. And we've seen others like Palmerston North that the cost of their wastewater treatment plant is $650 million. That is about 4 times their existing revenue. So that is, councils can borrow up to 280% debt to revenue. That project alone is 400%. So they've assumed using IFF. I know there's work being done on IFF to simplify the process. So that might mean we see more councils utilise that. But the ability to do so is not infinite. So S&P have said once a council does more than 2 projects using IFF, that will then start to impact on their credit rating. So you will not get complete balance sheet separation. It's LGFA's thinking that if councils can create multiply owned water CCOs, then because their water assets tend to be more highly leveraged than their non-water assets, that's actually potentially going to free up quite a bit of balance sheet capacity. So if you look at a Hamilton or Tauranga, they will potentially be better off if they go down the path of a water CCO. And some councils may choose to do that sooner than others, and others may decide to join a water CCO further down the track. And that's the experience you've seen in places like Scotland and Tasmania. And even if you look at our electricity industry, you don't get all the changes on day one. You get amalgamation and consolidation over a period of time. And that's potentially, I think, the path that we're likely to go down.
Just to follow up, if there was a demand to increase the 2.8 or 2.9, is the limiting factor on that getting the shareholders to agree to it, or a credit rating issue?
Changes to the there's two sets of covenants: the foundation sort of covenants, which is for the rated councils like yourselves, and then there's the policy covenants, which for unrated councils. If we change the foundation covenants, so the ones for the rated councils, which really are the only ones we probably need to change, because a council that is unrated can always go and get a credit rating, so to get the benefit of the higher covenants. That is a decision that can be made by shareholders, so we need 50% approval to make a change. So that's easier to do than if we have to get every member to agree. It is something that is being done. It is something LGFA has given some thought to. We need to do a little bit of work with the rating agencies because we've got a few balls in the air. So the implications if we lend to water CCOs and potentially increasing the covenants. If we lend to water CCOs, we might not need to increase the covenants, but if we do both, it might have significant implications for LGFA's credit rating. So we just need probably another month or two to finalise what's happening in the water sector, and then we'll be able to look at both those sort of issues. So I'd like to be more definitive, but it is something we are giving some thought to.
Yeah, thanks for that, Andrew. I admire your confidence in a month or two.
The legislation is meant to be June, so we should have some idea by then.
We live in hopes.
Well, we understand the minister is keen to work at pace, so we'll see.
Yeah, we will indeed. Thanks. But thanks for those explanations too. It's a rapidly changing area that you're working in, and we're benefiting from still. So, any further questions for Andrew? No. That being the case, I'll say thank you very much for your presentation. Look forward to catching up again in the not too distant future.
Yeah, thank you. And we know there's a fair bit of uncertainty, and as mentioned, we hopefully will be able to give councils more clarity over the next sort of few months. So thank you for your time.
No, thank you. Cheers. And all the best for the rest of your day. So, Yolanda. We have next.
Yes, Chair. I'm not sure what the arrangement is. Is it?
So let's go to the company. So it's Mark and Scott.
Thanks.
Come back to the letters at the end.
Yep. Welcome, gentlemen.
Good afternoon.
And thanks for your report, and we're looking forward to your presentation.
Thank you, Chair, and acknowledge Mayor Susan and the Council. Yet again, great opportunity for you to update on the airport. We're very mindful, of course, now that the information is somewhat dated in the sense that it's our first the half year, which of course you've received the draft SOI and the half-year report, and I think there's some work currently being reviewed with the shareholders around some of the wording in the draft SOI, but that'll be finalised as part of the process over the next few weeks. So look, between Scott and I, we'll give you a bit of a tag team, but we'll try and blend not only the half year, but really what is currently going on, and more importantly, what's our view of the outlook over the next few months, because they are trying times out there at the moment. So look, if we can, I've got a clicker here, so it's my destiny. Scott will give you a wee bit of a view at the moment. And I know you've heard a lot about our strategy, but I think given the sort of changing times and the emerging opportunities that we are encountering at the airport, I think it's a good opportunity just to keep our shareholders focused on what has been signed off and what our focus is and the direction that the board is undertaking, and of course we're implementing. So we'll take you through that. We'll have a wee chat about passenger numbers, but more about the aeronautical trends, and then some broad information on key projects and some of the performance update. But we will skim the slides because we'd like to give you an opportunity to to ask any questions.
So yeah, good afternoon, everyone. So yeah, just to give you a bit of why we're here, I guess, in the journey we've been on. Start about 2008, which was significant. It's the first time that the airport had been owned in its local government ownership that shareholders were called on to inject capital into the business. So around that time, the terminal had been redeveloped or rebuilt the first time. The runway had been lengthened, and at one point in time, we had 16 international services a week. Unfortunately, the GFC hit before the terminal and the runway extension had been completed. So, and then the restructure of Trans-Tasman services where Air New Zealand absorbed Freedom Air. So shareholders were called on to inject 12 million. So your share being, roughly about 3 or 4 million of that. And that's the only time shareholders have been called on to inject capital. The airport unfortunately continued to lose money for a period of time thereafter. It started the Titanium Park joint venture that didn't go terribly well. And of course, everybody was still recovering from the GFC. So it was really 2018, there'd been around 2014, a change in board and management. And it was 2018 that actually they brought the business, the aeronautical business back to break even. It returned a very small $200,000 surplus in its own right that year without reliance on land sales or anything. So that was a milestone. It was around that time that property market certainly started to boom in this part of the region and the airport picked up the hotel. So a strategy was set in place around maximising the land holdings around the airport and diversifying our earnings. And of course, it was only 18 months later that COVID hit us. So we got through COVID. That was a good tested strategy. We didn't really obviously foresee that, but yeah, I think it's proved we're heading in the right direction. Then we get to 2023, which, originally this was 2023. We're nearly, dare I say, halfway through 2024. But really, we're in this period now of continuing to grow and future-proof. So we are, as we, I think we all accept pretty challenging times, high inflation, cost of capital, a lot of the challenges you have as an infrastructure operator. But we're still really positive. We're still seeing growth come through. So we're still investing and diversifying. And we're going to continue doing that. It's also future-proofing capability, whether it be aeronautical infrastructure or actually simple infrastructure we own in the precinct, roading and Three Waters and things, with the view that we'll continue to grow the airport precinct, both as an aeronautical business and non-aeronautically, and with the view that we'll be a pathway to increasing dividends and returns back to all our shareholders sort of within the next decade. We're committed to keep that growth going. Just the next slide, really just to recap who we are and why we're here. And we are here to connect the mighty Waikato to New Zealand first and foremost. Of course, we are responsive if an international airline turns up, we're entirely responsive, but our mandate under the reset of the strategic direction with the shareholders was to focus on being a really good domestic airport and getting people around New Zealand and to be financially self-sustaining as well. So you appreciate we don't want to be coming up here and knocking on the door and begging for money where we can avoid it. So that's been a really important goal for us, and wearing the finance hat dear to my heart as well. But we are here to grow the aeronautical business, here to generate revenue and create a return for ourselves and for you, but equally to enable business in the region. So most of you are aware of the flight training facility and the work we did to acquire that, and we continue to be open to flight training, getting that facility filled for flight training. Equally, some other exciting opportunities are emerging for that. And we are here to protect the airport as well. So protecting, having enough money in the bank to pay for capital, but to be able to expand and invest and do that ourselves is where the property strategies come in. So we have sold land. That's been a means to an end. That capital has been really important. It's got the balance sheet in good shape, and it's allowed us to invest for long-term projects like the hotel, fairly heavy capital involvement up front, and a slow burn return, but really pleased we own it. Obviously did well through MIQ. So that's a very 20-second, 30-second speed read, and I'll pass you back to Mark.
So again, I don't want to focus too much because a number of these we'll cover in a couple of the other slides. But look, what I would sort of say, and I've got a loud voice, but I'll probably make it louder. How's that? What I would say is that we have, the business comes in cycles a wee bit. We've spent several years very much managing our aeronautical interests, but really focused on developing our non-aeronautical assets for the group. But of recent times, there's been a lot of focus on our aeronautical assets and how do we grow and improve those. And for argument's sake, we've done a significant piece of work on general aviation. We're one of the largest general aviation airports in New Zealand. And we have presented stage one of that strategy to our board earlier this year, and the final stage 2 of that strategy goes to the board in May. And that's really about considering what is the role of general aviation in New Zealand, what is the role of the airport company, because there are some conflicting challenges as the landlord and trying to allow these businesses that are often not hugely profitable to flourish and to be part of that kind of ecosystem at the airport. And we've had, and on the back of that, we have invested quite significantly in aeronautical assets in the last 12 months. We've bought several buildings, several hangars, and we've had a number of those that we've successfully acquired and managed to tenant. And we are seeing significant growth in some of those businesses. Menzies would be a very good example at the airport, that have really more than doubled their hangarage space with us. And so we're trying to ensure that that also fits into the economic enabling aspect of our role in the region. So it brings further people into the region to work, and of course they spend and live in the region. So that's a big piece of our work. And what I would also allude to is that Scott will talk about our financial performance at the half year. It was always deemed solid. Solid is always a safe number when you're talking to the board. But it is going to be, it will continue to be challenging for this 6 months and for the next sort of 12 to 18 months. So, so our focus is to make sure that we get the business and the group through this period, but also taking on some great opportunities, and we'll talk about a few of those. So you can see there that the emerging risks really haven't changed for us. The general economy is impacting, and I'll talk about that under certainly the passenger slide. And the hotel has also, it's performing adequately, but that's what its result is at the moment. And we see an opportunity that's continuing to improve, but it's tough out there. And I don't think that's going to change. And I'll talk about the plan change under Northern Precinct, because it's have had great support from Waipara. Obviously, it was a plan change through your council, and that's we've eventually got there. So we'll talk a wee bit about that. But look, while I'm focused on passenger numbers, I think it's sort of the concern at the moment is we are not seeing the growth in passenger numbers. And primarily this is a result of Air New Zealand's restriction on the supply side of the equation. Scott and I were in Auckland yesterday for a half day with Air New Zealand, actually just working through some of these issues. You may have heard in the media that they've had issues with their Pratt & Whitney engines, which has taken a number of the jets out of service, which means they've had to use ATRs in markets such as Wellington, Christchurch, that would traditionally be jet services. That's having an impact. It's having a tiered impact right across the New Zealand network. And of course, Air New Zealand provides, they are a monopoly, as we know, and they have 86% of all commercial passengers across New Zealand. So, look, so we are constrained by schedule, and those of you that fly, whilst our comparisons to Wellington and Christchurch out of Auckland are stable, and really there's not a major difference generally if you're booking 1 week or 1 month in advance. But what I would say to you that the connecting airfares out of Hamilton, like many other regional ports, are expensive. And I think Air New Zealand will be challenged for the next 2 years. So I think you're going to see this impact both domestically and on their international schedule for at least 2 years. And then that certainly starts to evolve into replacement aircraft for the airline, particularly the smaller Q300s towards the end of the decade. So look, what I would say to you is it's a choppy picture for domestic aviation in New Zealand over the next few years. And the challenge we have is to make sure, ironically, that our strategy that Scott's talked about has become so important, because those regional airports that rely almost solely on aeronautical income are concerned about what that means. So with that bit of doom and gloom, but I think it's important that you're aware as a shareholder that that's probably one of our largest, it is our largest risk for us over the next 12 months or so. Sorry? Yep.
Just our next slide, it's just an update on a HL 050 strategy. So yeah, committed to being carbon zero or net zero by 2050 in our emissions. So last year we gave you sort of some concepts of what a solar farm would look like, those of you that were here. And by Christmas, we're able to turn that on, and it's currently whirring away, generating, probably on a day like today, it'll be actually exporting power back to the grid. And then, but throughout the year, and as we get a few overcast rainy days and winters, should generate about 50% of our energy needs for the terminal precinct. We're able to then retail that through to tenants as well. So that's been a really good success story. It did what we thought it's so far doing. Admittedly, it's only been sort of 5 months in action, doing what we expect it to do. So yeah, really pleased to have that. We're the first airport in New Zealand to own its own solar farm. Other airports have done it. Typically, they put up the land. We put up the land, the capital, and reaping the benefits as well, and actually able to retail power back. So yeah, pleased to get that going. Also in the Global Airport Accreditation Program, there's various acronyms, but there's ACA, which is a Global Airports Alliance Carbon Accreditation Program. There's 6 levels to it, but as airports keep reaching levels, they have to create new levels. So Christchurch were the first in the world to get to level 4. There's 3 airports in New Zealand out of about an 80 worldwide that have got to level 4, and we're one of those. So we got there before Auckland and Wellington did. There's about 500 members that are at level 1. But level 1's not a case of paying a membership and putting a certificate on. We actually have to do tangible things to get to level 1. So if you think globally, the number of airports that funnel down to 500 members, then to 80 of us that are in the level 4, 5 and 6. So we're really pleased to be there. Second regional airport in New Zealand that did it. The other one that particularly because we've got some tangible runs on the board in this space, Air New Zealand have been talking about having a alternate fuels aircraft in market in 2026. They have got an electric aircraft that's currently in production as a demonstrator. They will be, they're shortlisted 2 routes. So there's Wellington, Blenheim across to Cook Strait, and there's Hamilton, Auckland. Obviously it needs to be short range because these aircraft are experimental. They have short battery lives. For a start, very much a freight service. They're not brave enough to put people in there, and looking around the room, a few of us might not be that brave to hop in an electric aircraft either. But I would say, how many times do you see a Tesla on the side of the road that's broken down other than running out of battery? But look, I think Air New Zealand expect to make an announcement in the next month on that. Really exciting opportunities for us to be involved with. Obviously, there's a timeline for commercial service, but yeah, I hope we can share some news with you around a shorter timeline than that as we move forward. So yeah, excited about that. And just next slide for me, just a map on the airport, and appreciate we are in your neighbourhood, so you are a territorial authority, so some of this will be not news to you, particularly around the permanent infrastructure. So we have connected up the western side of the airport. We were supplying off a bore feed to our tenants. We're now on your potable connection, so really good outcome for our tenants and employees over there with good quality water coming through. Just our infrastructure being end of life, and obviously with the development of the airport, we are continuing to work with you to build that capacity at the airport. Ingram Road as well, so that runs parallel to State Highway 3. That was, we're busy, if you know that, and where the airport were, there were 2 dead-end roads. We've connected that through, so some great safety outcomes for the airport precinct there, with particularly traffic now able to access State Highway 3 off the roundabout, rather than the aviation tenants having to turn right on State Highway 3. I've talked about solar farm and some of the other work there, and I think Mark's talked about it, so in the interest of time, I'll just move to the next slide.
If we go back, I can talk to Northern and with the notes from. So I mentioned Northern Precinct, and for everyone's orientation, it's primarily the top of the screen there, the mauve coloured land, and there's a little brown patch in the middle, and then it's surrounded by a bit of blue. Everyone's got the context. So look, you'd be aware last time we spoke to you, we were seeking to, Mike's here, seeking to take that land from rural land through to industrial commercial with a private plan change through Waipa. You may well recall that we were appealed to the Environment Court by DOC and Forests and Bird, or shall I say the council was, and there was a 274 appellates in the regional council in Hamilton City and I'm losing track of who else was, and of course, our own airport company was an appellant just to make sure that TPL was the property developer, but the airport company needed to be protected as well. Pleased to say that we were due to go back into mediation with the Environment Court next week, but we have now resolved all issues with the appellants and the side agreement is signed, and our lawyers will be filing that with the Environment Court, and we're hoping to have that through towards the end of June, formally through, which now then allows us to get on and develop that land over the next 20 odd years. About of the 100 hectares, particularly the blue strip you see below the mauve is land that will ultimately probably be retained by RAL, by the airport company, about 15 to 20 hectares, and the balance will be developed by our property company, Titanium Park. That just allows the airport to consider the interface between any commercial development and the airport to provide opportunities for freight. Particularly if you can see the wider blue, which is by the cross runway there in green, that blue, a triangle of that blue is actually airport land, but it demonstrates that we could consider freight hubs and expanding that area for development over time. So look, very excited about that. We're taking we're now working through the launch pack for the property, the marketing, the timing of stage one, and it's likely that will be advertising later this year, marketing later this year, and we're now just working with the board over the next 3 or 4 months in terms of the funding of this, and part of this we can fund under our own balance sheet and our own steam. Part of this may need other funding mechanisms to be employed depending on how much land we sell and develop and at what stage we get design builds. I think there's a great example here too that if I can, just for your own benefit, because there's always this conversation with kind of dividend flows back to the shareholders and also the requirements of the company to develop and grow the balance sheet, and we've obviously talked about that growth in the past, but we're currently working with a company where I would say 90% there on an agreement to lease. And we will develop that as the first building on the site. It's about a $20 million investment by the airport company. The funding will be ring-fenced, but this is a 20-year tenancy with 2 10-year rights of renewal from a very established 100-year-old business, New Zealand business. And to give an example for you as a shareholder on the balance sheet, that business will be worth north of 30 million once it's completed and tenanted in 2026. But of course, we have to fund it, and we will pay that down over a 15-year term. So it's just a good example of the sorts of opportunities that are being presented to us.
Can I ask a question while you're on that slide? Yeah. The roads of national significance and the inclusion of the Southern Links. That must be an important step.
It's a very important step, and we have worked hard over recent years to engage with Waka Kotahi and with the government and in fact National when they were in opposition. And look, we're delighted to see it on there. We remain very close. We've had we're staying very close to Tama Potaka and Ryan Hamilton. We've already had a conversation with Simeon Brown. I saw him at a meeting in Auckland last week. Yes, look, I think the great thing about Southern Links we know that funding this infrastructure is a challenge. The great thing about Southern Links is that the Crown already owns 75% of the land, roughly, and it's designated, unlike perhaps Pairiri as another sort of close example in our region. So we'll be working hard. We have also, and I'm quite happy to say publicly, about 3 months ago, we engaged with Stephen Joyce. Yes, Stephen Joyce. Sorry, I had a mental blank. And his advocacy company in Wellington, and Stephen's been helping us as we try and plan for, and of course now he's been appointed to chair the Infrastructure Commission, so that will take some of that ability away. But I think we're very vested in getting this thing underway, and we're already working with a lot of landowners in the sub-region to work through how we can help the government with funding solutions. And we know there is a challenge ahead, whether it's value capture, whether it's the challenge with this piece of Southern Links is that it doesn't lend itself, I'm told, well to tolling, because there's too many on and off ramps in a short space of time. So it's really how we get that underway. But the view that we're getting is that the government would be committed to getting the final technical design through during the first term, but it's likely to be a second term construction period, and who knows what will happen in 2.5 years. Sorry?
That's better than it was previously.
Yeah, look, there's no question that this government is very open and very approachable, and we have been able to connect with all relevant ministers. We were not able to do that under the previous administration. So, but look, we know we're fighting with 15 other projects nationally, and so perhaps we'll see what the Minister of Finance has to say in the next few weeks around the budget, and that's going to give us a bit of a steer. But we also have a meeting with Waka Kotahi, which we have quarterly, and that's coming up in a week or so's time. So I'd be interested to get the flavour of what is filtering down under the the National Land Transport Plan, etc.
I'd be interested in that feedback if you can share that with us when you get it.
Sure. No, look, it's critical to the value, selfishly to the value, but not only to the value of our land, but to the opening up the whole of the sub-region. It's a game changer, and but there's a lot of moving parts, isn't there? So I'll just carry on through past that.
Could I just ask you a question, Mark, about the freight proposals? You know, like what sort of freight would be likely to be moving through the airport? I mean, you're obviously pretty excited about the opportunities, but I'm just trying to think, like, would it be trans-Tasman freight, or is it, I don't know, local produce that, like what sort of things do you anticipate will be in there?
I used to, so when we talk about, say, and we've just received some rendering, which unfortunately we don't have today. But when we talk about freight, we're talking really about reserving the future opportunity. So you'd be well aware that the whole way freight is actually transported now. I mean, we see with New Zealand Post that the traditional method of postal delivery is changing to couriers. There's a very strong night movement of freight between Auckland, Palmerston North and Christchurch to distribute freight around the country. There are conversations and considerations by major freight logistics companies as to what does freight look like in the next 10 years, and particularly the Upper North Island. How is it served with the congestion and logistics associated with Auckland? And we have been asked to enter some of those conversations. So but certainly nothing around, I mean, Trans-Tasman, for argument's sake, is generally still in the commercial bellies of aircraft. So you need a commercial passenger service really to support freight in that sense. And look, Scott mentioned earlier on about the next generation aircraft. There's no question that there'll be smaller aircraft, greater frequency, and part of this tech demonstrator trial on whichever route they select is New Zealand Post are a partner with Air New Zealand. So it's a case of trying to understand how does that frequency, small aircraft, it's almost about, your drone and your pizza to your front doorstep. So what does freight look like? And I don't think anyone has yet landed on how that looks, but we're just trying to stay part of the conversation. How are we for time? I'm conscious of, are you okay? We've only got a couple of slides to go.
So just a
That'd be
quick
good.
update on our statement of intent. A lot of green ticks there, which we're pleased about. There's just three things to talk to. Firstly, climate change and energy reduction. So we set last year, 2023, a target for the first time in this space. So it was just a basic power reduction. We've set an even bigger one this year. And that was before the solar farm was commissioned. So on track to meet that and a water reduction target as well. Which is good because now we're paying you more for water than we used to be. So because we're using your water. So yeah, really pleased to make tangible growth in that space. I know people talk about it, but yeah, we're pleased that we're doing some stuff. Just the yellow dots on there around property and infrastructure. We had a couple of years ago sold some land to some private investors who were looking to set up corporate jet infrastructure. We're still committed to delivering that infrastructure. They simply haven't required it yet because they haven't started their development. So there's no build, nobody builds roads to nowhere. So we're the same with taxiways to nowhere. So that will be delivered when it's the right time for them, but we are committed to doing it. And just around profitability, look, we are going to return a profit for the year. It's just not quite as much as we would like. So we'd like to see the profit grow year on year. We're probably not going to see that this year. It's just going to be a bit more static. And that probably just speaks to my last slide, which is just on the financials. And I think probably for the main trading parts of the airport, so the aeronautical business itself, so that's people coming through the terminal, and the hotel, it's a case of both have grown year on year from last year, and that's volume driven, not just us putting up Big Creek Airport and putting up prices, but both have grown on volume, certainly more subdued than we would have liked. That would be sort of the takeaway on the trading result. Like you, interest rates and inflation, we've come off, we got our 3-year fixed rates, we refinanced last year, so our 2.7% interest rate became nearly 8% overnight, so that's hurt a little bit. Not unexpected, of course. And yeah, just the challenge around inflation, and particularly in the construction space, but I'm not going to lecture you on that because I know your challenges are many more millions than ours. And I'll just say with investment, we have the investment we talked about with Ingram Road and potable water and that. Great, we're pleased to keep investing. It's just a challenge with that investment, and we're probably going to see for the next few years is that investment for us doesn't make a return. So there's a bit more work to do in that space and permanent infrastructure. We need to make it. It's old infrastructure. So it's end of life. We also need that infrastructure to grow, but we're in this difficult space now. We're investment before we sold land and we got the proceeds of land sales. We're now at the point of reinvesting that. But the return on some of that investment, there's not a clear pathway to, unfortunately. So we do have a challenging couple of years ahead of us in that space with capital constraints.
And I think we've covered off most of this, so I don't really need to say too much more here other than whilst it's a measured outlook for the business, I think we have enough opportunities still in front of us that will continue to deliver and exceed actually our 10-year strategy and the highway. We are well ahead of where we thought we'd be, and I don't think that will be materially impacted over the next 12 months, but we'll just be perhaps more cautious than we would have been, and certainly, as Scott's indicating, some of the larger business cases and capital investment. And look, I haven't got the rough number but roughly in my head, we've probably got 50 to 70 million of investment over the next sort of 5 to 7 years that we will need to do.
Yep.
So we're mindful of making sure that the group's in a position to deliver those. Some of those, they'll all be business case driven, and some will give a far better return than others, but there's a fair bit ahead of us.
Yes, a very challenging environment you guys are operating in. Really interesting, the freight issues and questions that are, well, the whole country's facing, the world, I guess, actually. Yeah. Roger.
Yeah, thank you, Mr. Chair. You sound a little bit disappointed in your result, but given the environment that we're in, I think you should be very pleased with the performance. That's really great, I think. Now, I know this question was asked last year, and it'll probably be asked next year and the year after. There's no strategic mention of international passenger. Is that still in your thinking, or is there a possibility of that going forward? And I'll ask the same question next year.
No, that's fine. And some of your other shareholders ask a similar question of us from time to time. So look, it's absolutely whilst we're clear and our shareholders were clear that we're a regional airport, we remain obviously open, and we have had inquiries and we have had conversations in the past 12 months, and some of those continue to be ongoing. So the board have a view that if there is an opportunity, then we investigate it, and look, then we then determine whether or not we can viably make a go of it. I think what I would say is that I think the challenge at some point in time for the region will be if we would like to, if there's an airline that wants to seriously engage, there will be a question, I think, around a much wider question for our shareholders around the kind of the economic benefit of such an activity, because it is likely that the airport company won't be able to make a business case in its own right stack. So it'll be a conversation with the shareholders around how they'd like to approach that. So yeah, we always we never say no. And look, I think you will have seen my earlier comments. There is potentially a bit of a glass ceiling with domestic flights and passenger volumes within New Zealand. And look, it's Air New Zealand are a fantastic partner of all airports. But I'd also say to you that the airport, 25 CEs from the airport companies met about a week or so ago in Auckland. And one of our conversations is exactly this challenge around the growth of in New Zealand, the growth of second-tier airlines in New Zealand, Trans-Tasman. There's no question that the Tasman is probably underserved at the moment. Virgin have pretty much removed itself from the market. So all of those point to we would never not engage if those opportunities are there.
That's really, really encouraging. Good. Thank you.
Okay, so I have Bruce, Monty, and then Liz wishing to ask questions. Bruce.
Mine, Mark and Scott, is quite interesting. I was talking to an engineer the other day, a young engineer, with the use of the drone technology to disperse fog. Can you elaborate on that? He told me a fair bit, but worldwide it's going to be a big thing.
Yeah. Look, and Scott's the pilot and has been closely involved in this project. But look, what I would say is conscious here of, firstly, Piper Vision is the company that's endeavouring to get a breakthrough in this technology. And we are a small investor, the airport company, and we also provide the airport as a place to... We have the odd bit of fog. We don't have a lot, but we just have a wee bit here and there. The technology is proving difficult to actually deliver the results they're seeking. And I think, they're currently in, and they've had some fog days at Hamilton Airport. I think that they will get a solution that might be dependent on the density of fog rather than the solution. And we're a few months away from that. I would say that we're probably not as optimistic of the full solution that we were perhaps 12 months ago.
But getting consistency is the challenge. Like, it's worked and it's worked really well, but getting it reliably so you can have a flight leave Wellington at 8 o'clock, knowing at 9 the fog will be cleared. That's proving a real challenge. So I think to get it at concept, yes, it was great. Yes, it works, but actually at a commercialised scale, unfortunately, it's still probably that's the real challenge.
Mark, I've been observing the pressure that you're under to make financial returns to shareholders. Now that you've got the Northern Precinct through a private plan change, how does a quick win there, like keep what you need and sell the rest, stack up against your I'm getting preferred strategy that you do a sort of progressive development as you go?
Can you give me the answer?
Yeah.
Look, this is one of the, so we've always formed a view, let's get through the plan change. And as you know, it's taken us, we bought that land back in 2016. It's taken us till now to get our ducks in a row, get the plan change through. And we've always formed a view that, let's get to a point. And one of the big decisions now for the board is exactly that. So We intend to take to the board probably in about July or August, it might be September, a view on how we fund the beast, as we tend to call it internally. And as I think we've spoken to you before, the infrastructure alone is probably now north of 200 million required to fully develop out Northern, let alone the hundreds of millions that would be required to do the design builds and hold them versus land sales. And you might recall the original strategy was about selling perhaps about a third of the land, developing about a third and selling, and developing and holding about a third to give that long-term annuity income. And at that point, a real spike in the potential for dividends to the shareholders. I think the consideration, and now we're in a bit of a recessionary mode around land, although the general view is that we've seen the worst of that, but maybe 2025, 2026 will be much more encouraging. So I think there'll come a point where the board and the shareholders will want to regroup on this and just go, is this still the strategy that we want to employ? Do we want to, and how much of that teasing do we want to do? Do we want to sell more land and release, and indeed release capital back to the shareholders? Do we want to do the shareholders want to stay the course through to the 2040s that might provide them with an asset that is perhaps $500 to $700 million versus the $250 million it is today?
Yeah, thanks, Mark. That's, yes, clearly there's a lot to happen in this space. And I think we better make you the last one, Liz, for giving a bit of time.
Sorry, apologies that we've...
Yeah, no, all good. Hey, just want to say, look, thanks for your report. I mean, I think what we're around the table, we're seeing I have a huge amount of confidence in your team, Mark, and Scott, thanks for being here today. And particularly the solar and of course the accreditation for, I mean, that's, you're nationally leading, aren't you? That's what it looks like to me. So just in a different vein though, the Hamilton Waikato tourism, this is a little bit of a cheeky question, but you know that that a number of councils are revisiting or relooking at funding, and of course you own that entity. So are you thinking that you may top it up? I mean, is that an option for you?
Right, I'm going to answer this, Liz, in a couple of ways. One, I can't speak for the board, and this is a board decision ultimately. And of course, for context, I'm also a non-paid, but I'm a director on Hamilton Waikato Tourism as well. So what I would say is that the current LTPs that reflect reasonably significant, well, some councils, a significant reduction in funding. I personally believe that those councils are looking at it incorrectly. They're looking at it as a cost saving rather than an investment in the tourism receipts for the region. And we know that the region generates about 1.9 billion in tourism receipts, of which about 75% are generated domestically. You could argue, well, how much does the RTO contribute to that? You only have to apply 1% to that calculation, and you go, why would you let an economic enabler disappear from the region? I think that so the view is, and I think you'll see, I'm just finalising the airport's submission or RAU's submission that will go in tomorrow. But I think it would be fair to say that the board's view is that they would not be keen and unlikely to top up the organisation. So I think if currently the LTPs reflect perhaps a reduction in funding of anything up to 40%, I think that means that the organisation is marginal. And will the airport board close the RTO? I think that's a real possibility. I don't think they see their role to step in when the funding councils have elected not to.
Yeah, that's a bit of an awkward one, really, isn't it? Given that we own the
yes,
airport as well, so there's this giant circle that goes around.
I think it's so it is a challenge for all of the councils, and we understand the backdrop of why the questions are being asked. But if this is not a role that RAU sees, unless of course its shareholders want to speak differently to it from a shareholder lens.
Okay, look, thanks for that. Hey, and finally, just thank you very much for the tour that a number of us around the table here were able to participate in. It was a great afternoon, or after, I think it was an afternoon, and we really enjoyed it. It was great to see the solar farm in particular.
Thank you very much. And we actually will now do that every cycle, so that because I think a lot of senior new councils got a lot of value.
Thanks, gentlemen. It's interesting and informative, and you're doing a lot of really good things. So keep it up. Thanks very much.
Thanks, Chair, and apologies, we're over time.
All good. All right. Now, Kelvin. Welcome, and I see your presentation's on the screen, so all you.
Excellent. Kia ora koutou. Thank you everyone for the opportunity to come and speak with you this afternoon. I just wanted to briefly touch on the purpose of CoLab and the role that we play. I appreciate that we don't get to talk to you often and you don't live and breathe CoLab as I do. So I wanted to make the most of the opportunity I had with you before we get into the items on the agenda itself. So CoLab's vision is that council collaboration through the company maximises your community's wellbeing. Our purpose is to enable councils to benefit from shared opportunities, and we do that in three ways. First, we act as an ideas laboratory. So we're working with councils to investigate and develop opportunities to work together, and more recently and increasingly, we are trying to identify smaller groups of councils that are enthusiastic about a particular idea to advance that idea, because we find that, as you can imagine, we can only go as fast as the slowest of the councils that are involved. So if we can find enthusiastic councils, they'll be more willing, we hope, to work at pace, and we'll be able to achieve more together. The trick, of course, for me is to ensure that all of our shareholding councils are involved in one or more of the initiatives that we're working on, so that you're all getting a return on that element of the business. The second way that we achieve our vision is just through delivering shared services to our shareholding councils. So we have 9 shared service arrangements in place. And then the third is that we enter into a number of joint procurement arrangements that are for the benefit of our shareholding councils. And the most significant of those is the professional services panel, which is actually currently out for tender at the moment. And beyond that, the collective insurance arrangement, which Ken knows intimately as chair of the Insurance Advisory Group. But again, that delivers a real good return for councils. So last year we undertook a project to better understand the benefits of collaboration and what the size of the prize is for the region as a whole. And we've categorised those benefits into 3 areas, one being reduced costs, so taking time out of the system, procurement savings because of scale or for other reasons, etc. The second is creating value, and that's about increasing skills, increasing compliance, council compliance, and improved decision making. And the third is simply enabling innovation and change. So that is the research and opportunity development that I talked about previously, providing regional insights. And we obviously facilitate a number of instances where council staff can come together and talk through issues, which I know they enjoy and benefit from. That work that we did has ultimately culminated in annual value memos, as we refer to them, which is something that's been shared with the council staff already. We socialised it with the executive teams of the councils late last year, including a couple of sessions with your own executive team. And we just want to go through an exercise over the next little while of making sure that we validate what we're saying in there, because it's not enough that we think we provide value to you. You need to have confidence that you believe that also. And we want to ensure that that's the case. So we're working with some council staff through that process. What we do for Waipā is, and our relationship with you is pretty significant. Certainly from a CoLab perspective, perhaps we're a little bit immaterial from a Waipā perspective, but as I mentioned earlier, you're involved in a number of shared service arrangements, 7 out of the 9 shared services that we currently offer, Waipā participates in. And as I mentioned earlier, you benefit from a number of other ways in which we collaborate through the joint procurements, the investigation of opportunities, the various working parties that we have in place. I would like to take a moment to just acknowledge the support that we get from both Dawn and Ken. Obviously, CoLab is a very small team, and we do continue to rely on council staff to support the company and take it forward. And both Ken and Dawn play critical roles on our advisory groups in relation to insurance, as I referred to earlier, and rata in the case of Dawn. So I just wanted to acknowledge the support that they provide the company. So if we turn to the half-yearly report, I don't want to spend a huge amount of time on this because I'm not into looking back particularly, unless we can learn from it. So I'll keep my comments on the report brief. From a project perspective, we advanced a couple of key projects through that latter half of last year. So we completed research into how councils might be able to better attract and retain talent in the Waikato. That's what we're referring to as the Right People, Right Place project. So a range of initiatives have been identified as a result of desktop research, which included interviews with some current and former staff as well. The program of work was presented to chief executives at the CE Forum in February, got good support from the chief executives in principle, and they've asked us to go back to the people and capability managers and work with them to, I guess, prioritise the suite of initiatives that we've identified and how fast we think that we can go, recognising that there are competing priorities. The second project was in relation to the Waikato Regional Transport Model, which Waipā is a small funding partner. So that company, or that arrangement, has now got a new management and governance structure, and that's solely around, as we go to do a new model build, making sure that we extract enough value, or extract as much value as we can for councils. And finally, we're nearing completion of the quality assurance on our LiDAR data capture, which has been it's been a little bit of a slow burn, it's fair to say, but we are getting there, and we're very hopeful that we'll have that concluded by June. So turning to the draft statement of intent, obviously it's out for consultation at the moment. As you know, you will take feedback from our shareholding councils through till 1 May, and obviously take that feedback on board before finalising the statement of intent and sending it through to our shareholding councils by the 30th of June. This year we've actually taken a slightly different approach in the statement of intent. Historically, we have set out both key activity that we have planned, but also key projects that we are anticipating investigating in the coming 12 months. We've found that gets a little bit out of date pretty quickly, comparing February this year to June next year. And so we actually have been quite deliberate and silent on what projects or opportunities that we are going to investigate within our SOI. There's nothing secretive about that. In fact, one of the reasons we feel comfortable doing that is because we know we communicate what those projects are and the progress we are making with councils on them through other means. So we give updates to all of the working parties. We provide the executive leadership team with communications on the back of each of the board meetings that we have, which will provide updates and give discussion on those. The big thing for this SOI, draft SOI, has been the development of the company's 3-year strategy, which is a first for the company, given how infant we still are, and it's a sign of a maturing organisation that we feel that we're in a position that we need to be doing this. So I talked about the vision and purpose of CoLab earlier on. I also talked about the outcomes that we're looking for in terms of reducing costs, creating value, and enabling innovation and change. Sitting underneath those outcomes are 3 strategic goals that have been developed for the company. And we're actually already operationalising these at the moment. But this draft SOI is the first time that we've formally communicated those strategic goals to our shareholders. So those strategic goals are that shareholding councils understand we provide them with value, as I alluded to earlier. It's not sufficient that we think we are providing that value to you. You need to believe it and understand it. That we deliver value by growing the scale of our shared service function, and that we have diverse, talented and motivated people that work for us. So we have confidence that we can deliver on the first 2 of those strategic goals. So against those strategic goals, we've obviously got some specific objectives across spanning a 3-year term, but also annual targets within those that are set out within the statement of intent. From a financial perspective, within the statement of intent and the financial forecasts in there, I guess the headline is that in FY25 we have made a conscious decision to reduce member charges across the group of shareholders by about $900,000. We appreciate that you're financially constrained and up against it, and we wanted to do our small part to assist in that, albeit recognising that it is small. Look, we've been able to do that because cash reserves have built up slowly over a period of time, and it's having said that, it's going to be a one-off reduction. So we're just taking the opportunity on in the coming year. I would say that we're not returning cash, and that's for tax reasons. So you will see that coming through as a reduction in member charges rather than a dividend. And we expect, as I say, member charges to return to a normal level after in 2026. So the only other point that I'd make from a financial perspective in the SOI is that we've done a flip again in terms of how we've reflected CoLab Waters in our statement of intent. So it had been included or excluded last year with where we were at with water reform and what we were expecting under 3 Waters. We've actually pulled that back in now with the change of government and expected timelines, etc. So CoLab Waters is in again for the 3-year forecast period, and obviously we'll continue to update that as need be. I'm going to pause there and happy to take any questions.
Thanks, Kelvin. Yeah, there's a lot going on. Questions? Liz?
Yeah, look, thank you for that. Look, I absolutely appreciate that this is a complicated model and you've got a whole range of services that you provide. I just would think it would be, for me, it would be helpful, and I apologise if it's in here somewhere, to have our fee, our $1 million fee, broken down into what value we do see across the different range of services. I just have no real idea of what value we see from the different types, so Rata versus some of the others. So I just wondered if that was something we could see.
Yep, so look, thank you. We do provide that information. It's provided at an executive level. I don't know that it would be appropriate to provide that in a consolidated document like this that's relevant to all the shareholding councils, but very happy to provide the Waipa-centric view of the world in whatever way makes it work for you guys. So, yeah.
Clear.
Yeah, thanks for the report. And I agree, like it is a complex area that working in. You do heaps of different stuff across a lot of different work streams in that. I was really keen to understand about your lack of reporting, I guess, on those new projects that you might be working on. You know, like you said that you didn't feel you needed to put it in this SOI because you are reporting in a different way, you know, on those things. But I'm not sure whether or not that reporting gets to councillors or whatever. You know, it's more likely to be, you know, CEs and working groups and things like that. But I am really interested in the new stuff you're doing. I know that also there's a lot of interesting developments, you know, to do with efficiencies and that, to do with council processes, you know, whether that's digitalisation or using AI and stuff like that. Yeah, so I'm just putting a plea out there, I guess, that it would be good for us to have, you know, an idea of the projects that you might be working on in the next 12 to 18, yeah, 12 months, 2 years or whatever. Yeah.
Okay, yep, thank you. Again, happy to take that on board. I might have a think about how we do that. Yes, we communicate via other channels, but obviously the other reason was, as I alluded to, that things get a bit outdated. So even if I take last year, for example, I can't remember what the opportunity actually was, but between our draft and actually the start of the next financial year, we had already investigated, decided that particular idea wasn't worth pursuing, and so we dropped it and moved on to the next. So it was almost, by the time the final document was issued, it was out of date. So it's just trying to keep that currency alive. So thank you, Councillor. I'll take that on board and see how we can work on that.
Thanks, people. Okay. Oh, sorry, Luke.
Thank you very much for your report. It's really, really appreciated. I deal with the civil defence in quite a lot of areas, and your LiDAR is,
Yes.
We're looking forward to having this information, particularly flood-prone areas, etc. I see you've covered a significant part, but there's still quite a large area of our joint committee area that is still to be substantiated. And as you said, it will probably take you 3 months to actually get that. Is there any likelihood of us being able to ascertain that information at a civil defence, as I say, joint committee level?
I believe that you are able to do that. It won't be publicly released, but if you request it of the regional council, who are the worker bees behind the scenes, I think they are actually making that data available at specific requests. The reason it's not there yet is because it's subject to quality assurance by both regional council and then LINZ, and we're still working through that process. So yeah, I'm happy to take that offline and try and connect you with someone at regional council that might be able to help you out in that regard.
Yeah, so thanks, Kelvin. Yeah, identifying the opportunities and then finding the people to progress them is always a challenge, I guess. But there's certainly been a lot of excellent work done by CoLab that we've enjoyed benefiting from. So long may it continue.
Thank you.
Okay.
Thank you, everyone.
Now, so civic.
Yeah, so through the chair, yeah, look, as Yolanda said at the start of the meeting, Civic unfortunately couldn't make it here today. Yeah, we will in a few minutes pick up their letter, and I think Yolanda has got some comments that she can make when she presents the draft letter for Civic. So if that's okay, yeah.
Yep, all good. So do you want to move to the letters now?
Yes. Yeah, look, I think we should. Yeah, so look, perhaps if I just talk you through the first three, but yeah, but then we'll let Yolanda handle the Civic one. So I guess Appendix 8, page 126 is the Waikato Regional Airport Limited. Look, there are a couple of these that I am actually going to suggest a little bit of tweaking, just due to some aspects that have come up just in the last 48 hours or so. So yeah, so let me just talk through those as I go, but yeah, starting with Waikato Regional Airport Limited. So yeah, so Waikato Regional Airport Limited, yeah, I mean this letter that has been drafted is of course yeah, well, very supportive. That was certainly the tenor that it was written in. Yeah, I mean yeah, I think we all agree that the Waikato Regional Airport Limited has been performing well. Yeah, they certainly had a very difficult hand of cards that was dealt to them obviously 3 or 4 years ago in that COVID period. Yeah, they're certainly at the yeah, at the sharp end of the current economic conditions, and Mark and Scott yeah, pointed that out today in terms of you know, passenger numbers being below expectation, in terms of the yeah, the hotel while performing fine, yeah, obviously subject to those wider economic pressures. So yeah, so look, you know, obviously we're pretty happy with the way that their company is performing. The two items that are commented on in the letter are around you know, the international airline aspect, and yeah, and Councillor Gordon did pick that up earlier in the conversation while Mark and Scott were in the room, and then the dividend payments. So to be fair, both of these items, yeah, you know, have attracted a bit of interest elsewhere. In fact, attracted quite some interest, I believe, at Hamilton City Council when the airport yeah, went and reported to their Economic Development Committee just a week or two ago. Yeah, so yeah, since then there has been a little bit of engagement amongst the shareholding councils. Yeah, we've actually actually had a little bit of engagement with the chair himself, Barry Harris, on these particular aspects, because they are of wide interest to all of the councils. In regard to the first one, yeah, the international airlines engagement. So I guess what we are picking up in this comment here is that while there was the credible engagement was the terms that they used in the 6 monthly report. Yeah, it seemed like there was a little bit of a disconnect between the 6 monthly report that was on the agenda and then really only quite vague mention of pursuing pursuing the potential re-entry of international operators in the statement of intent. So really that's what this point is picking up. I guess what this point perhaps doesn't recognise at the moment is, of course, this is an area that does carry some quite significant risk. So to actually get an international operator that back in place is going to require quite significant investment. Of course, there has been a history of international operators coming in over the last 20 years or so, and investment being made, and then perhaps that ending up in tears not too long afterwards, when those international operators have exited the scene. So look, this is an area where we would be obviously obviously expecting the board to, to advance those discussions that they've had, the quite credible engagement they've had with International Airlines. We'd be expecting them to continue those discussions, but to continue those in quite a prudent manner. Obviously recognising that that any proposal for it to be successful, it would have to be sustainable, and it would have to be obviously recognising the level of investment that might be required by the airport company to actually secure those services. One of those key aspects of investment, obviously, but to actually have the appropriate border control in place, and the scanning equipment and all the other stuff that they would need to obviously operate at the international level rather than just domestic. So look, my suggestion in this space, and like I say, this has been bounced around a little bit with the other shareholding councils. It's been bounced around a little bit with the chair of Waikato Regional Airport himself. What I'd suggest is that the comment remains largely intact, that perhaps they are a bit more definitive in their finalised statement of intent than what they are already. I mentioned that there was a bit of a disconnect. It was sort of talked up in the half yearly, not so much in the statement of intent. But perhaps if I just modify the wording there, just to recognise, look, this is an area. While we're asking them to be definitive, we're asking them to clearly retain that as a focus area and commit to that as a focus area, that we'd be expecting them to obviously be to do that in a prudent manner, which I'm sure they would anyway, to advance prudently, recognising the need for sustainability and recognising the need to ensure that investment is sound. So that's my thoughts on that. Perhaps if I go to the dividend thing and then perhaps open this up for discussion. In regard to the dividend thing, I guess historically and over the last 5 or 6 years, Waipa has, every time we've written this letter, asked quite kindly, I think, that they look to provide an appropriate level of dividend. Actually, at least one of our neighbouring councils has been quite a bit more aggressive in this space in terms of seeking to to really get quite significant dividends out of them. Look, I would sort of be in a place where any dividend expectation, it does need to be prudent. Actually, Mark obviously talked at length about about the Northern Precinct and the level of investment that's required there. Obviously the airport it does have quite a bit of debt on its balance sheet, and in fact it actually doesn't have a lot of cash on its balance sheet. So it's an infrastructure provider. There's a huge amount tied up in the infrastructure. A lot of that funded by debt, and not too much cash on the balance sheet. Actually, in that sense, they're probably not unlike us in terms of in terms of some of the challenges that they face. So look, quite rightly, I don't think our letter is not saying, hey, we want you to maximise the dividend. But what we are saying is that, what we're potentially saying, if you agree with this letter, is that that perhaps they're a bit more indicative in terms of what the level of dividend could be, because at this stage there is actually no indication at all in the draft statement of intent as to what the level of dividend might be, despite the fact that they have actually developed up a 12-month budget. They have developed up balance sheet forecasts for the end of the year. So look, I know from the discussion that that they're happy to look at this matter. Again, they would need to be prudent, and in fact, this is the area where I could perhaps just beef up the comment a little bit, like not losing the tenor of it, and not losing the fact that we're asking them to perhaps be indicative in their finalised statement of intent as to what the level of dividend would be. But look, I guess to be fair, Chair, perhaps this letter should acknowledge that obviously any indication that they do give would obviously be subject to, to the final outcome for the year. At this stage, I haven't been definitive, about that. To be fair to the airport company, that really should come through. But still asking them to be definitive about their indications for a dividend. Okay, so that's I think essentially that is that is the letter in a nutshell. So very, very interested, obviously, in the committee's comments as to whether they support those 2 bullet points with a little bit of modification in the in the sense that I've talked about.
Yeah, Roger.
Yeah, thank you, Mr. Chair. Ken, I appreciate your comments. And I certainly felt that his verbal response to the international opportunities and physically what they're doing with that was a lot more positive than what was in the statement of intent.
Yes.
But I see absolutely no problem in your adding a prudency reference to whatever their future consideration is, because I'm sure with their board, they would be doing that in any case. So
for sure.
I think that's just a reflection of what that process would be. I think in the second aspect of getting a dividend, again, I agree with you. I also think that, the comment that it's been a hard year, and that hard year has put a lot of pressure on them, but they've still managed to return a positive result, or anticipating a positive result for the year. And with the Northern Precinct and the prognosis of the possibility of a future equity increase for the shareholders, I think again suggests that there could well be the opportunity for a dividend coming back to us well in the future. So agree that not to put an overdue pressure on for a dividend this year, because I think, as I say, the prognosis for the organisation is good. Yeah.
Yeah, so through the chair, you'll recall one of the very early slides in their presentation. Actually picked out a year 2033, which is obviously about 9 years away, where they were sort of saying, look, it's in that territory that they'd be expecting to be able to provide greater levels of dividend. And I mean I think that's fair enough in the context. Actually, I should also point out that on that very same slide, down in the bottom left-hand corner, they talked about the big injection of funds that they required. I believe it was around about 2008. And of course, that's always been a strong part of our call for a dividend, is the fact that we obviously the 5 shareholding councils came to their assistance quite majorly at that point when they really need that injection. So look, we're now in far better times than we were back then. So think about that as you provide a dividend, or look to provide a dividend, but quite clearly need to be prudent in doing so, obviously.
There's always this tension between people wanting to create the biggest asset they can and giving away income, or but that's so clear. And then Lou.
Well, I actually agree with Roger. I think that the international opportunities look really promising, and like we went to an open day there, and they shared what they think might be a way forward with that, which sounded really sensible. I also agree about the dividend policy. I mean, I would like to see higher dividends, but I don't think this is the right time to pressure for them immediately, because those passenger numbers would be a big driver, in creating more revenue that would again furnish a dividend. And they're constrained by Air New Zealand at the moment. But if they were able to open up, some international trade, then that actually would, see a lot more passengers potentially coming through that way. I'm always a bit worried about using land sales to drive a dividend. Yeah, because it's quite it's not a sustainable business model really. Yeah. They talked about retaining, the land that would give an annuity. Yeah, but I just think at the moment, it's probably not in the right time of the cycle for them for a bigger dividend. Yeah. So.
Well, the land was purchased to develop and, so selling it and producing a dividend is a perfectly legitimate business model, but so, yeah.
Right.
Through the chair to that point, and I think this is why, we did have that indication on the slide that was on the screen, that right up in that top right-hand corner, 2033, if they develop that northern precinct, obviously as they're absolutely intending to do, they'll be first of all selling land, which obviously will now enable a pay down of debt, assumingly. So they'll be in a much more manageable position in regard to their debt levels, as well as potentially retaining some of that land and driving off some annuity revenue. I would say in that circumstances, in that sort of circumstance, I would have thought the shareholders, would have a good call to much more significant levels of dividend that we've got. But look, I absolutely appreciate that that's quite some distance in the future, which is why our proposed letter is not demanding a higher level of dividend right now, but just an earlier indication of what that dividend level might potentially be.
Lou has a question.
Yeah, thank you very much, through your chair. I'm totally supportive of what you just said, Ken, and that is that as a statement of intent, we should have some direction on whether there is a dividend and what they're going to pay or have it, because this is a statement of intent. So traditionally, you do sort of place that to your shareholders at that time. And I know I'm following on here a little bit what happened in Hamilton, and they had quite a lengthy discussion on this, which I managed to tap into and listen. I do think that it is important that we do have that commitment from the board, that we do have the perception of what we're going to get. I'm not asking the actual whether it's going to be high or low, but that we are going to pay a dividend and some indication of how big that's going to be. I think that's good, normal practice.
Roger.
Yeah, just a little comment about Ken's suggestion that the sale of the third portion of the land may enable a reduction of debt to the shareholders. It could well, of course, be used to finance the strategies in the other 2/3 in terms of infrastructure and asset development in those other 2/3. So it's not an automatic assumption that they return it to us.
Okay, so the resolution does give
Some
license to modify the letter slightly. Are we happy in this one to go forward as we are? Thank you. All right, next, please.
Okay. Yeah, so thank you, Chair, for that enablement. Look, going to CoLab next. I think that's probably the order we were working on. So look, this letter is a bit briefer. This letter is supportive. Really not a lot of suggestion in terms of response. But look, again, I'd perhaps ask for a little bit of license, and in fact, some of this has actually come directly out of today. So look, what I am thinking of here is the fourth paragraph, where at the moment it says Council congratulates the board on its efforts to enhance collaboration across the region. We note the strategy you have developed and the outcomes you are seeking to achieve, etc., etc. Look, I mean, Calvin quite rightly pointed out in the presentation that they've done quite a lot of work just in very recent times in terms of developing up their new 3-year strategy. There was a very colourful slide that he put on there, and it's also it's very much set out on page 75 of your agenda. So perhaps we haven't been quite complimentary enough. So I'd suggest that I could probably beef up those words to note the really good work they've done on that 3-year strategy, and perhaps rather than just talking about the outcomes they're seeking to achieve, perhaps I could enhance that by actually specifically mentioning their three outcomes, which were to reduce costs, create value for councils, and enable innovation and change. I think that might perhaps be a nice touch to the letter to recognise that that as a council, we've looked at that strategy, and and we're actually going back to them and sort of indicating we think it is a good piece of work. The other one I was just wondering was, and Claire, this really came from your question. Where you were asking, or saying to Calvin, that particularly with them taking out that project lens out of the SOI, there's a bit of a void of information in terms of what they're working on. So I did wonder, and this perhaps needs to be a subject of discussion, whether perhaps one thing that we can go back to them is perhaps if they look at coming up with a mechanism to periodically communicate at the elected member level. So relatively high level, but if they could periodically just sort of put out some sort of communication, so that you people feel that that you're aware of what's happening at CoLab, you're aware of the key projects that they're working on. I mean, one of Calvin's points here was that that it goes out of date very quickly, but look, if they periodically provided some sort of communication that we could share at elected member level, I mean, would that sort of help with the perhaps with a little bit of a void of information that you were talking about? Perhaps it's a suggestion we could make. I mean, we at the management level we do see a lot of Calvin. So Calvin sort of comes in maybe once or twice a year, interacts with our executive team. Both Gary and myself meet with Calvin on a quarterly basis. So I think at management level, we're seeing them all the time. We've got really good knowledge of what they're working on, where they're at. But I do recognise Councillor St Pierre, and this very much came through in your question that perhaps there is a void at that elected member level. So so perhaps thoughts on that and in general about the letter.
Could I just respond? Yeah, I think that'd be really great, actually, Ken, because we hear about how important it is to be seen to be collaborating, that there are, I suppose, efficiencies and I suppose shared learnings, that can be achieved through better collaboration. And I guess I'd like to, have a good knowledge of how that's playing out, because I have the impression that Waipa has got quite a strong participation in CoLab's work, but I'm not sure whether or not other councils do. I wonder why they don't see the value of it, and could anything be done more to sort of, get better support across more councils. I have had a talk to Gary about that a few years ago, and he says it's all about the coalition of the willing, and in some ways, effort has to be put in to get the benefit out, and sometimes councils don't feel they're staffed at a level sufficient to put that effort in to begin with. I don't know. And something else that I didn't mention but would be useful as well is if there was some way to compare the outcomes or the achievements of CoLab compared, like not necessarily going to the point of benchmarking formally, but just so we had an idea how CoLab performs compared to other shared services arrangements in New Zealand or across local government, that kind of thing. Like, are we getting as much value as we could be getting, or maybe CoLab is leading the pack? I don't know, or maybe we're avoiding areas that if we did actually invest a bit more in getting more people, more councils involved, we could actually achieve far more, meaningful savings and that kind of thing.
Yeah, so look, through the chair, I think that latter bit would be a very challenging request. So, you know, the benchmarking aspects. So there are a number of leases that have developed over, you know, around the country of recent times. But look, they all have quite a different sort of focus about them. And a lot of their activities, I would suggest, are not are not particularly, but they're not particularly aligned. And in effect, I think it would be difficult to do a benchmarking exercise. Look, we do in the second to last paragraph here, we do note, the new performance measures, looking to demonstrate the value that CoLab is delivering, and I think they are in a far stronger place in this latest CSOI than they have been in the past. I mean, it's always an area that we've challenged them on and said, we've effectively said to them every year, show us the value that you're delivering. So look, I think they have done some good work in that space, and so therefore it's right to compliment them. But look, I think asking them to go to a benchmarking degree, I think that's going to be too difficult for them. I don't think they'll be able to do that. Yeah.
Roger.
Yeah, thank you. Very good, Mr. Chair. Yeah, Ken, I think that discussion and the question that was asked about getting some feedback to us on what the opportunities are that they're investigating. And I'm just going to ask the question, is the response to the statement of intent the right place for that to be? And would we be definitive enough in there to gain the response that we want to gain from them in giving us a greater understanding of what not only the initiatives that they're progressing, but the current ones that they're adding value to our organisation through doing. And I wonder if that's more of a subsequent confirmation of our request to them that it occurs rather than a mention in the letter.
Oh, look, so through the chair, just to clarify what I was proposing there. So look, this is our one time a year to kind of formally ask them for for something, and what we would be asking them for is a periodic. I don't know if I'd like to actually put an actual cadence on it. I think it's probably appropriate for them to think about what that might be. It could be 6 monthly. I really don't know, but asking them to be proactive in terms of developing up elected member friendly communication in terms of what their activity levels have been like, and to actually provide that to us, and to commit to that in their finalised SOI. So in their finalised SOI, I'd be expecting some sort of quite clear definitive statement to say every X months we'll look to develop up a communication to elected members every X months, to at a high level indicate where we're at.
I was just a little bit surprised at his initial response to say, oh, well, things happen. And therefore, by the time we respond to you, that opportunity's gone or it's been dismissed or whatever.
Yes.
And I think it's the understanding of what those opportunities are.
Yeah.
And how, even if they're dismissed, at least it tells us that they were addressed.
Yes.
And that's the kind of thing we should be looking at.
Yeah.
That's all.
Yeah, look, I think again through this year, I think CoLab have been really quite focused on improving their communication at the management level. But like I say, perhaps there is a bit of a void at the governance levels, and I think it's just a really simple request that they look to potentially see how they can fill that void and make a commitment to it. Yeah. Yes. Yeah, I understand that. Yeah.
Okay, so I think we've got to a point where we covered off that one, and the last
That's
one
good.
would be
the LGFA.
LGFA,
Yeah.
that's pretty straightforward, I think.
Yeah. Look, it is fairly straightforward, but look, unfortunately, and I haven't actually had the chance to talk to Andrew McCall about this. But look, one of the issues with the draft statement of intent that they actually issued was that they were really quite clear in terms of setting performance targets in all of the areas of focus, so environment and social responsibility, effective management loans performance targets and yeah, et cetera, et cetera. There was about five areas. And when it came to the industry leadership and engagement, it was just like completely blank. And I thought, well, they haven't actually done anything. When Andrew sent through his slides, yeah, around about 11 o'clock this morning, I see actually that they have got three very specific targets in that space, which for some reason didn't actually feature in the SOI. So yeah, so at least they've done that. I think the comments that we're making in terms of the very specific comment in terms of where we would really appreciate them playing and assisting us. I think that is still well worth making because that doesn't quite come through in these three targets that I've seen and that were on his slides today. But look, I probably also need to quite clearly indicate that they've obviously developed some targets. They've missed some out of the draft SOI. They need to make sure they actually find their way into the actual finalised SOI. So that's the only way I'd modify that one. I think.
I think that's, yeah.
Well, I was just going to ask about their dividend policy, because we've had a discussion about that in the past.
Yeah.
And they have said that they actually prefer to sort of shift the benefits more to the people that are borrowing rather than the people that have put the money up.
They do tend to be the same people.
Yeah.
Yes.
So, it didn't really come up really in his verbal presentation and that. Are you comfortable with the dividend policy as it is? Because I don't,
Yes.
I can see that they are facing some changing, shifting in the way, their business model is actually being played out. So I wouldn't want to put them under pressure. But if you've got any thoughts on that, Ken?
No, I have. And perhaps through the chair, I'll respond. So look, the LGFA have for a very long time, they have a really established percentage that they look and I can't even recall what their percentage was. I think 2% kind of rings a bit of a bell in terms of their return on investment for those for those shareholders who obviously have shares, but because there is the cohort is slightly different. Like not every borrowing council, is a shareholder. It's a much smaller group that are shareholders, but all of those shareholders, I'd say, are also borrowers. So look, I think they pay a reasonable level of dividend, and like I say, it is very much a fixed percentage that they kind of locked in with quite a lot of discussion in agreement with those shareholding councils at the time. The only thing is, that was kind of 8 to 10 years ago. It was a long time ago, which is why it's a little bit cloudy in my memory in terms of where we've landed. But I would say it does work, and also because it locks on that they're kind of meeting everyone's expectation in that regard. And then of course they can totally focus on doing everything in their power to try to bring down the level of borrowing margin, the margin that they put on top of any interest rate when they actually lend to councils. So look, my gut feel is that that's an appropriate space for them to be in. I think that's an appropriate space to be in that works for Waipā and the wider sector.
Okay, all right. So you're clear on that one as well. That's good. So now we've got civic. Which the members going to.
Sorry, it's the last letter. I'm noting that Gary will be signing this, not Ken. We're basically just acknowledging receipt of the SOI, reaffirming that they have a position not to declare dividends, but rather recycle the profits back to reduce membership charges, with a further 0.2 basis points for the financial year. And they're also doing work in terms of communicating to their members on what they're doing and the services they're offering. So just commending them on that.
Oh, sorry.
Hi, good afternoon, committee. I'm just here with the March financial results. I will take the report mainly as being read. But I will just point you to page 7 of my report, which be 141 of your agenda. So it's the explanations in there for the other expenses. About 3/4 of the way through, it's got a decrease in expenditure for management services for Mighty River Domain of 282,000 and the one for the Lake Tikautu of 975,000. That is actually a duplicate, it's an error. The correct explanations are actually above, so those two will need to be taken out. And I'll take any questions. Thank you.
Yeah, so that was a continuation actually on page 282, but that's all good. Thank you. So, Claire.
Yeah, thanks, Nada. So the question I have is on page 139 of our agenda, which I think is page 4 of your report. Yeah, so in the top right-hand corner, there's a box that's got budget versus actual variance for operations and budget versus actual variance for CapEx. So I'm not sure if we've had this before, but it looks like we're well below in our operational spending compared to the budget. And I wasn't sure if that is a year-to-date one, yeah, like a progress one compared to the year-to-date. So it looks like we're pretty much on track. Yeah, so I wasn't sure about that because I would have expected that we're probably really pushing the limits on trying to keep to budget because of the pressures that we've had with a lot of, yeah, different increases in costs and things. So I wanted to understand that a little bit more. And then also on the same page, just in the next panel down, the third box across is the delivery of the CapEx program. And it's the one for community services because there's a red box there on levels of service. 80%. I think I've asked about this before. It's mostly to do with the Cambridge Town Hall, but just wanted to check on that. That's all. So just those two things.
Yep. So through the chair, can I just jump in there? So look, Councillor St Pierre, I think the best, if you're asking about that 98 versus the 125.
Yeah.
So if you go to page 141 of your agenda, which is the I suppose the statement of comprehensive income. I mean, those are jumping straight off the total operating expenditure line. So the 98 is an actual year to date, obviously. The 125 is a full year, the full year forecast, the full year budget, of 125. So sitting at 74%, and of course we are actually 3/4 the way through the year, so it's not looking too bad. I mean, recognise obviously that the 125 has now been forecast to go up to 133, but we are reporting back against the original budget, and we're doing that exactly the same, obviously in the CapEx space. That actual box at the top right-hand corner of page 139 has kind of always been there. However, it's usually been there previously in the form of a graph, which was actually incredibly difficult to read. So we changed it away from being a graph to being the numbers. All of that information in that top right-hand corner has always been reported in this report.
Oh yeah, I guess I'm a visual person because I just saw that those numbers were in orange. And if you look up the top, just the next line up, orange means at risk, you see? So I thought maybe it's been deliberately reported in orange to denote that it's at risk. It'd be good to have a little note to say that this relates to that comprehensive revenue report on the previous page or something, because that would help me, track it through.
And actually, that's an interesting observation again through the chair, because I'm not actually sure that we're being, I'm not sure it was intended that those be an orange. I mean, I think they just happen to be an orange. I don't think that actually relates to the key above, but you do actually make a very good point. You know, and it might be that we actually need to change the colouring of that going forward. Maybe it all needs to be in black, which unfortunately may not sit well with you being a visual person, but but yeah, I don't think we're intending to say that those are off track. Yeah.
Roger.
Yeah, thank you, Mr. Chair. Now, thank you. I'm probably a little bit going into too great a detail here, but on page 8 of your report, which is the statement of cost of services, understanding that we're March and that's 9 months through the report, there are 3 expenses that are close to or over already having exceeded the annual budget. Now I'm looking at district museums 102, properties 112, and waste management 98. And perhaps reflecting on Claire's comment there that we know that we're in a tight ship currently. And can you give us any other information on the background as to why those expense areas are effectively 33% ahead of budget at this stage?
On the first 2, I'll need to go back and have a look. On the waste management, I would say that's due to the increase in the recycling contracts that have gone up. So we've got an increase there of expenditure, but I will just confirm and can get back to you on those other 2. Yes.
Thank you.
Okay.
Mike.
Yeah, slightly loath to ask this because I know we're pressed for time, but just one simple one in your key risk indicator report. Under the CapEx, there's 2 real standouts there that in transportation we're 205% and in community services we're 144. I kind of assume they're mistakes because I couldn't see it in the statement of capital expenditure.
Sorry, what one were you referring to? The
Look at the key risk indicator report.
Yeah.
In the delivery of CapEx programs, centre box, there's 2 absolute standouts.
Yeah.
It's you see the 2 that are way past 100%.
Yeah.
Actually, so, and there's probably no better person to answer that than the lady sitting on my left, but I'm thinking that transport space, I mean, we have had a whole lot of money provided to us to advance the cycleways and walkways, etc. So will that, I mean, that would be very much in those level of service spaces, would that provide?
These are pretty chunky categories here. This is level of service for transport, and you're talking 200%. Just see weird. Sorry.
Through the chair, I can't explain it. I agree with you. I think it's well worth exploring further. I do believe it's an anomaly. With respect to community service, a lot of that in the growth space has been property purchase, and that has been tracking ahead of the 70% expectation for some time. So that one I'm confident is appropriate. Transportation, I think there is something there that we need to understand better and be able to explore.
Yeah, thanks, Marty. I actually think both of those probably need some investigation. Yeah. Can't believe I didn't pick it up myself, but hey, it's all good. Roger.
Yes, thank you, Mr. Chair. And just moving further on to the report, it's the 145 when we've got the rates report. Now, I know that the percentage of owing from prior years it's not too dissimilar, but the actual dollar value of those suggests that, in fact, that dollar value between the 2 years has doubled. And I know that in some of our other committees that we're addressing some of the legal moves from certain citizens that perhaps see their place in this world as being not responsive to local authorities. Is that becoming an increasing trend to us and is likely to become more of a problem as we go forward?
Yeah, so through the chair, yes, there is that dynamic in there, Councillor Gordon. Actually, you will recall at our last meeting, we actually did put a report up in regard to three ratepayer debts, and a couple of them were in that space, if you recall. The other one was absolutely not associated with that. But look, yeah, we do have some sticky debt in that area, and like there are three that we are very aggressively chasing at the moment in terms of pulling those in. If they were able to be pulled in, certainly by the end of the year, that $150,000 number would come down quite significantly. So yeah, so it's an area we're really actively working on, and yes, of more recent times, there has been some stuff in that sovereign citizen area.
Wondering if that, and you're saying that that's an increasing trend that we're seeing?
Yeah, so well, when we say increasing trend, it's perhaps I would perhaps say an emerging trend. I mean, we didn't really know anything about that maybe 3 or 4 years ago. So it's a more recent and emerging development, and yes, but possibly is starting now to come through in these numbers, whereas 2, 3, 4 years ago it wasn't part of that at all.
Yeah. And these particular ones don't have a mortgage, do they? So we can't get at the bank. So yeah, no, that's I remember all that.
Yes.
But as you say, it will take that 150 down quite substantially once they have been collected. So we have a recommendation on page 136 that the report of NADA be received. Could I have a mover, please? Thank you, Roger. Thank you, Monty. All in favour? Contrary, no. That's carried. Okay, thank you very much, ladies. Item 8, new community lease Cambridge Football Club. And I believe I saw David lurking over there. Welcome.
Good. Yeah, so it's like.
No, I haven't changed that one.
There we go. All right, we'll try that again. Kia ora, Mr. Chairman and members of the Finance and Corporate Committee. Today I bring you several reports of new community leases for existing community groups. I bring you these reports due to Angela McEwen working remotely in the UK at the moment. The first one is a new lease for the Cambridge Football Club Incorporated. The report seeks approval from the committee in its function as administering body under the Reserves Act to grant a new lease to the Cambridge Football Incorporated for use of part of the Cambridge Town Hall belt located on Vogel Street, and seeks delegation for the GM Business Support to sign the lease. So this is a new lease for an existing group on the Greenbelt.
Liz.
This is a very straightforward lease from what I've read, so I was happy to move.
Second by Dale Marie. All in favour? Contrary, no. Didn't seem to be a lot of discussion there. Fantastic. Item 9. Oh, this one might be. Oh, yes. Thanks, Liz. David.
Through the chair again. This is a new community lease for the Karapiro Kayak Racing Club Incorporated. They are located already on site, and this is a new lease for a building to be erected for storage facilities. So the report seeks approval for this lease and also seeks delegation for the GM support to sign the lease. The area is located behind the existing club rooms, and once construction is completed, the shipping containers, ugly shipping containers that they're using, will be removed from the site.
So Ken's got a comment there.
Yeah, look, just a comment from me. So look, I was very, very involved with, and actually I see Eric in the back there, who was, who had a position, and I'm not sure if you still do, Eric, with the Cambridge Yacht Club. But look, I was very involved in the canoe racing, coming to the domain a few years ago. That new building being built in association with the yacht club, because of course the yacht club had for many years, had their own building on that piece of land. We looked to basically secure an arrangement where that piece of land could be the building, the new building that was going to go onto it, could be a joint home of not only an elite sport in terms of the canoe racing, but also very much a community sport in the form of the Cambridge Yacht Club. Basically the whole focus of that project was developing a facility that could be used by both. And of course, it wasn't just the Cambridge Yacht Club, but also Karapiro Kayak, also very much a community organisation was operating out of that same space as well. Probably the one thing that was, I thought, a little bit unfortunate about that whole deal was while we did well provide, I'd hope Eric agrees with me, for the Cambridge Yacht Club and that community space continuing, as well as obviously canoe racing coming to town. Perhaps the club that sort of missed out a little bit was Karapiro Kayak, because they had previously had a lot of their kayaks, a lot of the equipment underneath. There was quite a big space underneath the old Cambridge Yacht Club building. That of course was demolished. We built a new shed for Cambridge Yacht Club. But these guys weren't well provided for. They just pretty much had to rely on containers. So to me, we're a few years down the track now, maybe 5 or 6 years down the track, and this perhaps now gives Karapiro Kayak a good community club, doing a whole lot of really good stuff with members of the community, including quite young members of the community. It actually gives them an asset that they can really use to further their activities. And even better, they're coming up with all of the funding themselves. We just need to provide the piece of dirt that they can actually reach their shed on. So I think this is really exciting. Yeah.
Through the chair. David, tēnā koe. Thank you for bringing this to us today. I'm not going to stop this, but I don't want to put any roadblocks in, but I would like to talk with you later on around some of the points in significance and engagement, because I've asked before around just how the staff come to some of how they've assessed it and come to a point of saying things are not significant. I'm just taking note that in the public notification stage there where it said submissions, and I know how we have a relationship with Ngāti Haua, Ngāti Koroki Kahukura, and I'm wondering, even in that, do we talk to them and make note to them that there is a submission coming? Because I know a lot of our people don't get to put into submissions because we're already up against the bat and we don't have the resourcing. So I I've just noted that and seen those little bits in there. So I just have to check for mana whenua status. So yeah.
Yeah, through the chair, the mana whenua has been taken on this journey, and we have been on site with representatives from Koroki Kahukura.
Thanks for that. Great. Look.
Happy to move it.
Yeah.
Second, sorry.
Yeah.
Ken.
Sorry, just in regard to the councillor's point there. So I think if you look at page 162, I think that engagement with iwi and mana whenua is very genuine. I mean, is listened to, because the initial proposal, as it says on page 162, was to tie in the lease period with the Cambridge Yacht Club lease, 27 years. on the basis of what Mana Whenua said to us, council officers actually chopped that back to the normal 5 + 5 + 5 of a community lease. That was very much in response to Mana Whenua submission on this point. So so I think that's valid, isn't it, David? Yeah.
Okay. Thanks for that, Bruce. Second. No further discussion. All in favour? Contrary, no. It's carried. Item 10. Yeah, thanks, Claire. Cambridge Riding Club Incorporated.
Yep, through the chair again. This is a new community lease again for an existing community group, and it's the Cambridge Riding Club Incorporated. So the report seeks approval from the committee in its function as the administrating body to grant a new lease for them on part of the Cambridge Town Belt located at Carlisle, and seeks delegation through the GM Business Support to sign.
Was that a move? Dale Marie has moved. Do I have a seconder? Lou, any discussion? No, I'll put the motion. All in favour? Contrary, no. It's carried. And riding for the disabled. No, I don't think you need to, Roger. Yeah, that's fine. David.
And through the chair again. This is a new community lease again for an existing tenant for the riding for the disabled. And again, we seek approval for the committee in its function as administrating body to grant the new lease for the riding for the disabled. And they are located on the southern end of the Greenbelt off Fogle Street. And we seek delegation for the GM Business Support to sign the lease.
Discussion? A mover and a seconder, Claire and Dale Marie, all in favour. Contrary, no. It's carried. Excellent. Thank you, David. Well done. Good work, though. I mean, your team is doing good stuff. Okay, Waikato local water done well. If only. Oh, I didn't say that. I'm getting a bit doddery. Okay, Dawn, welcome, and thank you for leading us through this.
Kia ora koutou. Just a few key points, and I guess we've already touched on this a little bit in terms of Andrew from LGFA sort of starting to sort of touch on areas of consideration needed, but just a bit of background and as I say, key points. So looking at the legislation framework, slightly behind and ahead of us, obviously Bill 1 that the government introduced repealed the previous legislation for water services reform. Bill 2 that we've kind of already sort of talked about a little bit is the Local Government Water Services Transitional Provisions Bill, expected later this month, which will outline the obligations around preparing water services delivery plans, steps towards economic regulation and the requirements that the government are wanting to see, and streamlined processes for that establishment of CCOs where that is deemed appropriate for delivery of services. So that, as I say, we'll see it hopefully the end of this month, but they're looking at enacting again quite quickly, so middle of the year enactment. Bill 3, we'll hopefully see that towards the latter part of 2024, and that's where we start to see those structural and financing tools starting to be further articulated in terms of expectations, as well as starting to touch on taumata arawai and starting to address some of the concerns that have been raised around the small water suppliers. So going into what we expect to see around water services delivery plans, just noting they're not regulatory plans, and so therefore it's still the requirements of our long-term plans in terms of that regulatory function. And they're required to demonstrate how councils will deliver water services that are financially sustainable, meet regulatory quality standards for infrastructure and water quality, and unlock housing growth. So that's what we're going to be preparing. Alongside that, And detailed in the report, you'll see that as Waikato Region is working collaboratively and looking at what opportunities there may be for either regional or sub-regional CCO opportunities for water services delivery. Data has been compiled from what was being prepared for everyone's 2024 long-term plan, and that's currently being analysed and verified. So we haven't got any outputs from that at this stage. But we're looking at in July getting access to that such that we can start to determine what a water services delivery plan needs to be developed for Waipa, whether it's one for us on our own or one as part of that wider collaboration, or in fact looking at both as options for the future for us. So that was just a bit of a summary, but welcome questions.
Yes, thank you. And thanks, Dawn, for this update. And I endorse your initial comment that we heard, already at this meeting, some of the considerations that are going to have a big influence in this particular future path. But my question is, and I see that we talked about the joint Waikato mayors, given that Hamilton City are possibly looking at a standalone situation as well within there as to what's going to suit them. But who is actually involved in the Waikato mayors? Like, how wide does it go? Or is it kind of our future-proof area that are involved? Like, can you give us any further indication there?
Through the chair, it's an all of Waikato conversation through the Mayor and Chairs Forum. So all are participating. It's not just the future-proof councils.
Claire.
Yes, thanks, Dawn. It's great to see this report because I suppose I'm hungry for a bit more information and detail. I'm really concerned that, we're going to have to work out what to do with our water services probably, within 6 months or a year. And I feel like we just don't have enough information at the moment. And I know this work has been going on in the background and that, but we're really not getting very much detail. Now, we did have a chat and you explained that there is work underway, that's trying to get more detail and certainty and stuff like that. Yeah, so I am looking forward, to getting more detailed information that would help put us in a position where we can actually make an informed decision, for our ratepayers, really. Yeah,
Liz and Susan, do you have a comment?
I was just going to say we could talk for an hour about this, but Claire is absolutely right. There's not enough information. I understand we'll get an update at some point in the future. And yes, we'll probably have a really short time to turn it around if we want to try and get this through. But I just want to move the report really and just wait for the information and probably not speculate at this point because I just don't think we could, like I say, we could spend an hour doing it.
Yeah, thanks, Liz. Moving it. Thanks, Dawn. Any further conversation? Do we have a seconder, please? Thanks. Roger. Thanks, Roger. All in favour? Contrary, no. Carried. Okay. Walton Street. Eric, hi. Yeah, this looks like a good project.
Thank you, Chair, members of the committee. Can I take my report as read?
Absolutely.
Okay. I invite any questions.
Yep. Susan and then Lou.
Thanks, Eric. So I'm trying to understand this, and so it might sound really stupid, but this was reported in the paper on the 3rd of April, and it was the first I'd heard about it, which is kind of a bit concerning. And I'm trying to understand why that you're seeking only now to turn a street into a one-way when clearly it's already been literally decided without it even coming to us. Help me understand why it's worked that way, and further to that, what if we don't agree? I appreciate that the toilet upgrade has prompted a bigger thinking in the area, but it just seems to me you've kind of put the cart before the horse on this one.
Through the chair, thanks, Susan. So the reason it went public is we consulted with the Te Awamutu Community Board. So that was seen as a prudent group to consult, and I think it was reported from there. And the other thing, if this committee doesn't support this scheme, we can just basically do the bare minimum works required to facilitate the toilet block replacement only. So there's no, there's this full flexibility in the decision making.
Okay.
So did the Te Awamutu Kihi Community Board have the power under the Public Places bylaw to agree to the designation of that full length of the road to be one way?
Through the chair, no, they don't. No, only a council committee or council has that.
Can seem like a conundrum, right?
Yeah, I guess socialising it with the full council at some point for this would have been preferable.
I suggest that the synchronising was really out of whack, which is a bit concerning. And furthermore, I'd like to understand what the traffic volume data was. You've said on the second page, and that due to low traffic volumes, what's considered low? Because people will, even though you've engaged with emergency services, the community board and business owners, they're not the only ones that would be impacted by that. And I guess the first question would be from a Te Awamutu resident who uses that road regularly, that I use that road and I haven't been consulted, so what does low traffic volumes look like?
Through the chair. So low as in the ability of the adjoining network to deal with it as they stand now. So the volumes, Roach Street can easily deal with any additional flows, and so can Redoubt Street as well. So there's the volumes are so low, and all the other roads around have got good capacity that, yeah, I guess that's how we determine that it's such low volume and no impact.
Lou, you had a comment, question?
The only comment I had was that this was actually, as I say, the community board did present it and they did accept it. The issue that we do have with that street is that there's a lot of pedestrian personnel there. The courts, when they're in session, have a large number of people. So there's often people sitting in those areas, and increasing the parking area is certainly a big plus there. And that does do that, it does tend to do it. And as I say, I can see where the mayor is speaking, and Mayor Susan, and I can accept that completely. However, this was presented, and most of the local residents I've spoken to are quite amenable to it. So particularly with the impact of the toilet protection. Currently, the toilet is an absolute disaster to get in and out of. As you know, it just sits exposed. It has no protection whatever, and it is an ailing facility at the best of times. So I'll leave it at that.
Claire.
Yeah, I hear what Mayor Susan is saying, and I just want to clarify the intention of taking it to the community board. Like, it wasn't really seeking a decision. I presume it's more like it says in the report, it's more like consultation to make sure that it would be difficult to present it to us without doing that consultation in advance, or have you got a standard approach to these kind of things where you cover off the stakeholders first, but it's not like a decision, it's the decision always remains at council?
Through the chair, yeah, it always remains at council. And I guess we see them as a useful board to discuss ideas with, and almost like a sounding board. So on the very minor bylaw issues, we don't need to consult that widely. But in this case, like we didn't have to consult with the community board, but we chose to.
Yeah, I guess it was, in the interests of good relationships or something, I don't know. But yeah, I guess it'd be good to have a bit more clarity, in the future on it. I mean, I thought the design is very well thought out. I loved the extra parking that's going to result from it, which is, do you know exactly how many extra parking places there will be?
Through Chair, we're targeting 6.
Oh, okay.
Yep.
Yeah. And the one-way system has appealed to me because it is a lot more pedestrian friendly as well. Yeah. So, and the wider footpath as well. I think there's a new wider footpath on the south side. Yeah.
There's a new footpath along from the fire engine museum building along the courthouse to the back of the toilets.
Yeah, which I think will help with connectivity. Yeah. So I'm pleased with the way it looks and think it's a positive move, and I'd be happy to move the recommendation.
Okay, thank you, Claire. Susan and then Roger.
I think it's great that the community board consult. I've got no issue with that. It's more the sequencing. And I guess when you see a headline like this, 13 days ago, the decision does appear to have been made. And I guess that's what I take umbrage with. It's the process that doesn't appear to have been particularly sound in this particular instance. I have absolutely the right place to go and ask for input from the Te Awamutu and Kihiki Community Board, 100% all day long. But it seems it's, I don't want to use the analogy tail wagging the dog because that's not appropriate, but it seems the decision has all but been made. And I guess I put a bit of a flag up because although in this instance, I think the project's right, it's great and sound, if the processes aren't sound, we might have problems when it's and potentially a project that's not so favourably seen. So I'm stickler for following the right process and you will be fine, but clearly we've got a little bit out of kilter on this one.
Yeah, so what, am I hearing that, because look, I read this and I thought, great, but it's just a short workshop with us sometime prior would have been appropriate. Is that, the kind of thing that you would?
Yes, certainly before articles in the newspaper were announcing a new one-way street will also accommodate da-da-da-da. It's a foregone conclusion. Pictures of Brad outside his new set and outside the Dunnies, it was pretty comprehensive, which is cool. I've no issue with it. But the decision's made, essentially, and we haven't seen it. And we're the ones that have the legislative power to make that decision, and we seem to be the last ones informed.
Yeah. Okay.
So it's a process thing. I'm not concerned about the actual project itself. I think it makes total sense, but it's a process thing.
Roger.
Yeah, thank you. Through you, Mr. Chair. I support totally Mayor Susan's comments. I'm concerned that we're not getting the full background. For instance, when we have a decision to make on certain matters of consultation, we'll actually be given the results of the consultation so that we can have confidence that that consultation actually did occur, and also the data that sits behind that decision being made. I hate to reflect on another circumstance where we're already in deep community concern over lack of consultation. Before I would possibly be able to endorse this going through, I'd really like to see a full report on the consultation and the data that sits behind it, if that's possible. So I'd suggest that I'd like to move a motion that it lay on the table until that further information be received by council.
Okay, I have a motion that's been moved but not seconded. I think I will ask if there's a seconder.
So we'd need to get a seconder for this.
Yes.
For the vote, and then
then if
Then-
that fails, then
Yeah.
yes. So do I? Okay,
So I move that, yeah, because I'm concerned too that there's a bit of urgency as well, isn't there, that this work gets completed before the 30th of June?
yes.
Yeah.
Can I just clarify?
Yes, you can, absolutely. Yes.
I thought we could do an amending motion, understanding what is anytime we liked. We didn't have to vote down the first moved motion. And it's just kind of a nicer way to do it, right?
Only because councillor Gordon has said he wants to put in a new motion.
He did an amending motion.
No.
Oh, sorry. I thought I heard you say amending motion.
Because the one, the initial motion didn't have a seconder.
Yeah.
And therefore it
Okay,
was
sorry.
not passed. I put in another motion that would need a seconder.
Yeah.
To say it lay on the table until further information.
My mistake. Could that be an amending motion though?
Well, we've got a second. vote,
Okay, too late, sorry.
So you're gonna have to vote.
I'm done. Okay.
Yeah, so look, we have a mover and a seconder for the recommendation on pages, whatever they are, 199 and 200. And practically speaking, I think that makes sense to me that the project should go ahead. And I'm sure the process shortcomings, perhaps I should say, have been noted. So I'm going to put that motion. All in favour, please say aye. Aye. Contrary, no. Do you wish to be recorded?
Yes.
So we have, the motion is passed. Councillor Gordon wishes his no vote to be recorded. Thank you. Thanks, Eric. Yep. Okay.
Yeah, yeah,
Yeah.
yeah.
It's the second time we've done that.
Well, the thing is,
Let's talk about it.
yes, it's procedure, yeah. Okay, item 14, contracts under delegated authority. Who's speaking to this?
Dawn, I
Oh,
believe.
Dawn.
Thank you. Members may recall last month at Service Delivery, we considered the Tatahi Electrical PLC upgrade. This is a continuation of the work to ensure that the Tatahi Water Treatment Plant is maintained and operated in compliance with Tangata Arawai requirements and as part of a wider upgrade. So yeah, welcome any questions.
I'm happy to move.
So Damari seconded. All in favour?
Aye.
Contrary? No, that's carried. Resolution to exclude the public. Thank you, Susan. Thank you, Claire. All in favour?
Aye.
Contrary? No. Carried also.